Hi traders, hope you are well. Markets are very quiet today, so it's a great time to dive into the markets and do some coaching sessions. And thank you for your feedback. Thank you for your questions. It's always helpful to give me an idea on what you don't know. I don't know what you don't know, unless you tell me, of course, where your issues might be. But we're going to start today with the Heikin Ashi candles into a little bit of basic stuff, but nonetheless it helps us to break down the markets and to see some kind of market structure, and in order for us to make some better decisions. So the first thing is I've highlighted the wicks in white just to help you understand what these mean. When the wicks are there, are lots of wicks going on, the market is not quite sure which direction it wants to go. So that's the first thing to understand. Now, in a bullish market, if I zoom in here, we can see that in this instance, we can see that this market here is range bound, lots of wicks, bottom and top, so it's not sure where to go. So we're looking for a potential breakout, and I'll show you how to do a simple way of calculating support and resistance and breakout situations. This is a daily chart on gold. This occurs on any chart, of course, but make sure you're using something that's trending, like the Dow Jones or pound yen, something that's got high volume through it. But gold is much more volume through it, much more liquidity than anything else, of course. That's the magic of gold. We're not seeing that today, but that's okay. We've got FOMC tomorrow, and that's probably why. But there's a couple of things I want to just discuss with you. And so what you're looking for in a bullish candle, you're looking for a bullish candle to go green. When it goes green, the buyers are stepping in without any wicks. Let's have a look there. Have a look there. So that's a good day. 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 And for sells, similar situation. If you see a reversal on a supply zone here, then of course you're looking for no wick. So wait for this candle to finish and then sell at this point anywhere along there. And the price tends to have a very, very big move. This might not seem a lot on this chart, but that move there on no wick candle is 7, 8, 900 pips. Okay, let's say 890 pips just for fun. Okay, so that's the first thing. So how do we calculate support and resistance lines? Now, what I want you to do is to change from Heikin Ashi to a normal candlestick. And as soon as you change it from Heikin Ashi to normal, so I'm going back in time here, to normal candles, then you can see straight away that there's a lot more noise in the market. You can see lots of red and green. It doesn't show you the consistency that you're looking for. So what I would like you to do is to change this normal candle over to a line candle. And what we're actually going to do is then, once we've got that information, we're going to be drawing some supply zones, or resistance and support is the old term. Resistance and support, the old days. And we can just do this, we can just do this, we can just do this. We can just do this. We can draw a line here, can't we? We can draw a line here. We can draw a line here. We can draw a line here. And we can draw a line here, can't we? So the recent retest of 34.25 has not been confirmed and is not being, it's not even close. So we can use that as a target, can't we? So when we see these resistance lines and support lines, remember that once the resistance line gets broken, it becomes support. Resistance line broken, it becomes support, and so on and so forth. So we can see that there was a line there, back there. This got broken here at 27.17, straight through, and then we had a line here, resistance line, becomes support. The price broke through, and so what you can do from that is really good, because you can actually wait for the price to come into those kind of areas or the breakouts. I'll be going into the gold on steroid software in the next few minutes, so don't worry. We're getting closer to the market. We'll be going into the advanced pro charts. We're going closer to the market, looking at buy zones and sell zones, very strong buy zones and very strong sell zones, so you can make better decisions and improve your performance and increase your knowledge, which is what it's all about, isn't it? So that's one technique which you can do. It takes a bit of practice, but once you've got the hang of it, you can actually pick these areas out as targets. So if the price comes down into this area here, and the Heikin-Ashi candles will be coming down into this area and breaking this area once I show you these. So we can see here that in this instance here, once you've drawn the lines here at 27.21, we can see that this is respected in the market, and you want to go down to the 1 hour chart to see what's going on. But nonetheless, we can see that there's a beautiful red candle here with a slight wick. This is the one, and that's your 900 pips there. Once you get a breaker structure here, notice here the candle, no wick, 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 no wick. So these are very strong buying opportunities into the market here. Happens on any market, on any asset, on any time frame, come into that. But doing top-down analysis from a higher time frame will give you a better insight into actually what's going on in the market. So here's a fantastic example where I've drawn those previous support and resistance lines. We can see that when the price comes into that area, we can use the Heikin-Ashi charts to confirm a trade when it goes green. Now the key here, and the important point that you're looking for, is to ensure that when you enter that there is no wick. So we can see we've got a doji there and then a bullish candle. But look at no wick, no wick, no wick, no wick. Anytime you want to get in, get in. Okay, no wick, no wick, no wick, no wick, no wick, and then it changes there. That's your exit strategy. Now that might only be 100 pips, but nonetheless it's an easy way to trade. Let me show you a short position. Remember, this is an hourly chart. It's not quick. We're not talking about a 5-minute chart. We are talking about holding a position for several hours. So you don't need to watch the chart. You just need to be there at the point of the resistance zone. And here's another resistance zone here. And we can see that the price respected it. And we can see immediately a red candle, Heikin-Ashi candle, no wick, no wick, no wick, no wick, no wick, no wick, no wick. And then the candles went green. So that might be your exit strategy. Enter, sell here, hold, 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 hold. The key here for your success is to ensure that you hold the position no matter what until it goes green, because then you're talking about hundreds and hundreds of pips in one day. There's 90 pips there, 91 pips there. So great opportunities. And of course, if you're in an uptrend and it's bullish, you don't have to wait for the price to reach the intended target to sell it. You can have that continuation pattern here quite simply. Wait for the Heikin-Ashi to turn red, but then go green. No wick, no wick, no wick, no wick. Exit, no wick, no wick, no wick, no wick, etc., etc. So understanding the Heikin-Ashi candles will give you a great edge to your trading analysis. Just make sure you're going with the trend. Let's go into the markets and let's have a look at gold on steroids. So on to gold on steroids. And if you have the gold on steroids software, this is what it should look like. I've gone into the dark mode. I think it might be a little bit clearer. I'm not actually sure, but I think it's slightly better. It might look different to yours, but it should be the same. Basically what we've got here, we've got the outside bars. Look out for those. I've been on about this for many, many years. So look out for the outside bars here. And the price and the wick comes outside this channel. That's the first thing you have. The other thing you have is the 50 moving average. Very important. So below the 50 moving average, you're looking for a sell. Above the 50 moving average, you're looking for a buy. Below sell, above buy. Okay, that's how it works. We're not seeing any volume in the market today because we're waiting for the news, but nonetheless, it is a fantastic way to trade. The other thing you have is the tool here, which confirms the buy for bulls coming in, and the sellers coming in, buyers coming in, and so on and so forth. So that's fantastic. Now, as we can see now, the price 33.34. I did throw in a signal this yesterday because we had this strong demand area. This is signaled as a strong demand area because of this tool here. Special settings. None of this is standard settings. This has been defined and refined over many years. So at the end of the day, please don't try and guess what tools to use because it doesn't work. Now as we dial into the lower time frame charts, let's go into the 5-minute chart. Let's have a look at yesterday. And as I was saying earlier about Heikin Ashi charts, you can use them on any time frame, even the 5-minute chart. So here, look for a Heikin Ashi candle with no wicks. Okay, and just exit as the price goes green if you like, or it reaches your respected target. So we can see now that the change of character occurred. This is a 1, 2, 3. So basically you have a 1. Covered this many times before. 1, 2, 3. And the price did go up. So you could have had up to the target, 125 pips. Now it got respected here, the sell power of 69 on the 5-minute if you're around at 11:25 AM. And now the price moved down there, moved down about 100 pips from there. So look out for these areas. They're important, especially during like today, because at the end of the day, you're not going to get much movement because of the FOMC decision coming out and the speeches coming out later in the week. So again, gold can be a little bit like that. It's just one of those things you have to get used to. But again, here, have a look at the Heikin Ashi candles. So you can work off the daily, you can work off the 4-hour, you can work off the hour. It's totally up to you, or the 5-minute, totally up to you. The key here is the Heikin Ashi candles being in the right direction at the right time and having no wicks. Now we don't have a strong support. We do have some support here. No, we do have strong support, sorry, just spotted that. We have a buying power here of 61. I did throw this into the VIP signal room. There is a signal room if you're in that. If you're not in it, get in it. So we've got 33, back to that old number, which has been to and fro for the last few weeks. 33.33 is highly likely to be held here. So just a little trade there. So let's go into, what should we go into now? Let's go into the advanced pro charts. Before I do that, go into the advanced pro charts, looking at major support, major supply, major resistance, buy zone, sell zones. You can simply use the Heikin-Ashi chart as your buying opportunity, selling opportunity on a very strong supply or demand area. So we have this going on now with gold. See this here? See this at the top here? So let's look at that. So here we go. So into the supply zone, we have, you have to zoom out with this to see where it's at. 70, sell power 70, very strong sell. And we can see that here, there's no wicks here at this red candle here. Red candle, no wick, no wick, no wick, and so on and so forth. So when you get into a position like we are now, live at 13 minutes past 2, we can actually get into that here. So we can know that it's in a very strong demand area. We've got that confirmed here with the blue, combined with the buy power of 60, which is very strong. However, it's a 5-minute chart. You haven't got to wait long. You can actually wait for the candle to finish and then go green without a wick if you prefer. So like this here, like this here, and knowing then that you are highly likely probably to go long back up to this area is highly likely. So a fantastic way to use the Heikin-Ashi charts. Hopefully you find that particularly useful. And the same thing applies to the advanced pro charts, the power signals, the power buy signals, the power sell signals above 65. I prefer above 65. You can do it above 60, but above 65 is much stronger. 81 is a no-brainer. Okay. 81's a no-brainer. Okay, so what you're looking for here and how you enter the position is totally a personal thing, because every one of us, even if we had the same charts, trades differently, using different risks to rewards, using different attitudes towards the market, depending on how aggressive you are, how safe you want to be, what your lot size is. All that kind of thing has a major impact on your performance, of course, in the long term. So the pound USD is a perfect scenario where we can see what's going on, and the advanced pro charts tells you when to sell it and it tells you when to buy it. So there's 3 factors you're looking for. Let's get rid of some of this. Let's deal with this one down here. Now this is not, it's hindsight now, but of course it's not hindsight at the time when it hits 131.61. So once it hits that area, there's highly likely to be a very strong bounce. The buyers here, the institutions, are ready for that. They're going to take out the stops where people are going to come in early. Now you can, of course, wait for the change of character. That's totally up to you, depending on how aggressive you want to be. So you can enter a trade here at 131.59 if you're at the chart at the time. You might not be at 6 a.m. London time. You might not be around. You can wait an hour or two and then come into this position here once we have change of character. But what do we actually have that we know creates a buy signal? What do we know that creates a sell signal? It's not knowing what's going to happen in the future. It's knowing what we've got now, the leading tools, which are telling us in advance where the price is going to go. So that's really important. It's no good using lagging indicators to tell you what's happened in the past. We want to know what's going to happen in the future. So at this point here, we know there's a strong demand. That's already there. This is from previous months. It's been established at 131.50 roughly. And so the price is likely to react at that point. We have a very strong buying opportunity of 81. 81% of the institutions are in. Not retail traders. They don't know it exists. So here we have a scenario where we have number one. You've heard it all before. It's going to come again. If I can find my tools. Here we go. What colour are we? Let's go blue. So we have negative divergence. Hidden or normal, we don't mind, we don't care. We have a power buy of 81. So that's 1, 2. So we have convergence into an area of demand and a power of 81 with divergence, positive divergence. We then have change of character. It's a 4-hour chart. You know, you've got plenty of time. There is your stop. Your stop is given to you by the Advanced Pro charts. It tells you when to trail your stop. It tells you when to buy. It tells you when there's divergence. It tells you how strong the buying signal is. It tells you when to buy. Now this is the scenario we have at the moment. Markets are quiet. However, we do have this situation. I'm just keeping an eye on gold. So this is, I'll keep coming back to gold because this is really important. I think I want to show you this. My thoughts of it. It's bounced off that area 33.25 with a power buy. Gone down now 59, so it's not strong. So let's see how that goes. So this is the reverse. This is the sell on the Advanced Pro charts using the same rules, the same strategy. Sell power 69, not as strong as 81, but that's all right. Above 65 is good enough. And so the first thing that we do is check that we have negative divergence. Must change these colors. It should be red. Negative divergence into convergence. Sell here would be a good idea. Okay. Aggressive, yes, but you're going to have a really tight stop there and a massive risk to reward 5 times typically. Where this one here, the change of character, where it goes from green to red, is a good idea. And of course you can wait for it to break down the 20 SMA here as well. So highly likely to give you a fantastic trading opportunity. The Advanced Pro charts tells you where the target is. Okay, so you can have 2 targets. You can put on 2 positions, one with the target here, bring your second position to break even, and then come down, let your second position trail the red line. Until you're stopped out. At some stage, you have to give some money back. It could be a stop loss, which is giving money back to the market, or hopefully it's going to be where you're making massive profits, and at the time that you want to hold on, it just comes back on you and you give profits back to the market there. That's the perfect scenario. But at some stage you will have to give money back to the markets. That's the nature of the beast. You want to keep the market going, you want to keep people happy. Expect to make losses now and again, that is normal. But if you follow these rules, so I'm just flicking back to gold. So there was a selling scenario here, wasn't there? Here, red candle into strong supply, into a supply zone here. 100 pips. And we're not seeing much going on, are we? So that's the scenario. Let's look at a few more examples. This is the Aussie yen. It was really it wasn't a nothing trade. It was a trade that we banked at just 30 pips or something, or 30, 40 pips, whatever it was. But it was a very good example of how it works and why it works and how you should use it. I didn't wait for the change of character, so I didn't expect a big move. It may happen to be a big move, but the same rules apply. So power sell of 77, very strong. And I sold it up here right in the middle of the sell zone, 109.87. And I hit my target here at 109.45. You should have got that signal. If you traded it, congratulations. The Euro Swiss is a fantastic example of the recent moves that we've had. A beautiful move down into demand, convergence with divergence, the green line. And we can see that the price has now moved off this area, and then we had change of character, and we can see that the price moved up into the market structure and everything went green. Trail your stop, trail your stop, trail your stop, blah blah blah, up to target here. The situation now is that the price has moved up into a very strong 67 sell zone, as I sent into the signal room, and the price is now moving down. I do expect a big move on the Swiss franc to go higher. Not doing the analysis today, it's absolutely flat as a pancake, but I just wanted you to get the heads up onto how powerful the advanced pro charts are. Once you get the hang of them, once the penny drops, then you will start to make a whole lot of money once the markets move. So couple of things here. I did say that there was a trend line here in the VIP room, which you might want to wait to be broken. It's been broken. For me, I got in at the very top here or just below it. And now we have change of character. It's below the 20 moving average and highly likely to move down. There is a bit of demand here, but it's very weak demand. Can you see why? Strong demand is down here. We'll probably have another buying opportunity down there at some stage. So some fantastic examples of how you can use the advanced pro charts bullish candle, no wick. So we can actually get into that, and what I'll do, I'll keep you updated with these just so you know what's going on, and then you can make a ton of money. But if you want the advanced pro charts with the special settings, let me know. If your charts do not look like this, let me know. You might have to invest a bit of money, but hey, you're going to make a lot of money.